If you have federal student loans and you've been making minimum payments or struggling to keep up, I need you to listen carefully because what I'm about to tell you could literally change your financial future. Starting in 2026, the federal government is bringing back one of their most aggressive collection tools, and it's going to hit over 5 million borrowers like a freight train. We're talking about wage garnishment, where they can legally seize up to 15% of your paycheck without even taking you to court first. Before we dive in, please remember that this video is for educational purposes only and is not financial advice. My goal is to help you understand these concepts so you can make your own informed decisions. Here's what we're going to cover today. First, I'll explain exactly what student loan wage garnishment is and why it's making a comeback in 2026. Then we'll break down who's most at risk and how to tell if you're in the danger zone. Finally, I'll walk you through the specific steps you can take right now to protect yourself before it's too late. By the end of this video, you'll know exactly where you stand and what actions to take. Let's start with the basics. Student loan wage garnishment is when the Department of Education can legally take money directly from your paycheck to collect on defaulted federal student loans. Here's the kicker. They don't need to sue you first. They don't need a court order. They just send a notice to your employer, and your employer is legally required to comply. Now, you might be thinking, wait, didn't the government suspend collections during the pandemic? You're absolutely right. Since March 2020, the Department of Education put a moratorium on most aggressive collection actions, including wage garnishment. But that protection is ending, and when it does, they're coming back with a vengeance. Here's what makes this so serious. During the pandemic pause, millions of borrowers either couldn't make payments or chose to redirect that money to other financial priorities. The Department of Education estimates that over 5 million federal student loan borrowers are currently in default or will be in default by 2026. That's 5 million people who could potentially face wage garnishment. And we're not talking about a small amount here. The government can garnish up to 15% of your disposable income. For someone making $50,000 a year, that could mean losing $500 to $600 from their monthly paycheck. For families already struggling with inflation and rising costs, that kind of hit can be devastating. But here's what's really concerning. The definition of disposable income for student loan garnishment is different from what you might expect. It's not just your take-home pay after taxes. They calculate it based on your gross income minus taxes and other mandatory deductions. So even if you're living paycheck to paycheck, they can still take that 15%. Now let's talk about who's most at risk. If you're in default on federal student loans, you're in the immediate danger zone. Default typically occurs when you haven't made a payment in 270 days for most federal loans or 120 days for Perkins loans. But here's where it gets tricky. You might be in default and not even realize it. During the pandemic, many borrowers' loans were automatically placed in administrative forbearance. When that ends, if you don't take action, your loans could quickly slip into default status. The Department of Education has said they'll provide a grace period, but the details are still being worked out. You're also at higher risk if you've been making payments that are less than what's required on your standard repayment plan, or if you've been relying on deferments and forbearances to avoid payments. When those protections end, the full payment amounts kick back in, and if you can't handle them, you could find yourself in default faster than you think. Another group at risk includes borrowers who consolidated their loans or changed services during the pandemic. Sometimes these transitions create gaps in communication or confusion about payment requirements. If you're not 100% sure about the status of your loans, you need to check immediately. If you're enjoying this breakdown and finding it helpful, I'd really appreciate it if you could hit that subscribe button. I create content like this regularly to help you navigate complex financial situations, and subscribing helps me reach more people who need this information. Let me give you some real numbers to put this in perspective. According to the Department of Education's own data, before the pandemic pause, they were garnishing wages from about 1.2 million borrowers annually. The average garnishment amount was around $3,000 per year. That might not sound like a huge amount spread over 12 months, but when you break it down, we're talking about $250 being taken directly from people's paychecks every month. And here's something most people don't know. Once wage garnishment starts, it doesn't just stop when you catch up on a few payments. It continues until your entire loan balance is paid off, unless you take specific legal steps to stop it. This isn't like missing a credit card payment where you can just make it current. This is the federal government using their full collection power. The process typically works like this. First, you'll receive a notice that your loans are in default. Then, you'll get a wage garnishment notice at least 30 days before they start taking money from your paycheck. During that 30-day window, you can request a hearing to dispute the garnishment or set up a payment arrangement. But here's the problem. Most people either don't receive these notices, don't understand them, or don't respond in time. Your employer receives a separate notice and is legally required to comply. They don't have a choice in the matter. And unfortunately, having your wages garnished can create workplace issues. While it's illegal for your employer to fire you solely because of wage garnishment, it can still create uncomfortable situations and potentially impact your professional relationships. Now let's talk about what you can do to protect yourself. The first and most important step is to know exactly where you stand with your federal student loans. Log into your federal student aid account at studentaid.gov and review all your loans. Check the status of each loan, your servicer information, and your payment history. If anything looks confusing or incorrect, contact your servicer immediately. If your loans are currently in good standing, your priority should be keeping them that way. Make sure you understand when payments are scheduled to resume and what your monthly payment will be. If you can't afford the standard payment, research income-driven repayment plans immediately. These plans can significantly reduce your monthly payment based on your income and family size. For borrowers whose loans are already in default, you have options, but you need to act fast. The two main ways to get out of default are loan rehabilitation and loan consolidation. Loan rehabilitation requires you to make 9 consecutive on-time payments of an agreed-upon amount. The payment amount is typically based on your income, so it might be much lower than your original payment. Loan consolidation allows you to combine your defaulted loans into a new direct consolidation loan, which immediately brings you out of default status. However, you'll lose any progress you've made toward loan forgiveness programs, so this isn't always the best option. There's also something called full payment, where you pay off the entire loan balance. But let's be realistic. If you could do that, you probably wouldn't be in default in the first place. Here's a crucial point that many people miss. Even if you're facing wage garnishment, you still have rights. You can request a hearing to dispute the garnishment if you believe it's incorrect, or if it would cause financial hardship. You can also negotiate a payment agreement to stop the garnishment. But these processes have strict deadlines and specific procedures, so you can't wait until the last minute. If you're married and filed taxes jointly, be aware that the government can also seize your tax refunds to apply toward defaulted student loans. This is called tax refund offset, and it often happens before wage garnishment begins. So if you're expecting a refund, you might not get it. One strategy that some financial advisors recommend is adjusting your tax withholding so you don't get a large refund. Instead of giving the government an interest-free loan all year, you keep more of your money in each paycheck. Then, if your refund gets seized, the impact is smaller. For those of you who are self-employed or work as independent contractors, wage garnishment works differently. The government can't garnish payments from clients, but they can seize money from your bank accounts, and they can put liens on your property. So don't think you're safe just because you don't have a traditional employer. Let me synthesize everything we've covered today, because this information could literally save you thousands of dollars. Student loan wage garnishment is coming back in 2026, and over 5 million borrowers are potentially at risk. The government can take up to 15% of your disposable income without taking you to court first. You're at highest risk if your loans are in default, if you're behind on payments, or if you're unsure about your loan's status. The most important thing you can do right now is check your loan status at studentaid.gov. If your loans are in good standing, research income-driven repayment plans to keep them that way. If your loans are in default, explore rehabilitation or consolidation options immediately. Don't wait for the garnishment notice. By then, your options become much more limited and stressful. Your assignment this week is simple but critical. Log into your federal student aid account and take a screenshot of your loan summary. Write down the servicer for each loan, the balance, and the status. If you don't have an account, create one immediately. This 15-minute task could save you from months or years of financial stress. If this video helped you understand student loan wage garnishment and what you can do to protect yourself, please subscribe to the channel. I regularly break down complex financial topics like this in ways that are easy to understand and act on. Your subscription helps me reach more people who need this information. And frankly, with student loan policies changing rapidly, we all need to stay informed and help each other navigate these challenges. The next few years are going to be crucial for student loan borrowers, and I want to make sure you have the knowledge and tools you need to protect your financial future.